Hi, welcome to an Easy Trader Update. This is Kim speaking on Wednesday, 20th of February. Before I go on too much further, I just want to remind you now, as I'll probably forget towards the end, but we have got a live webinar day, trading webinar on the 26th. This came from people asking for a live trading day. Now, whilst we can do sort of live trading days in rooms, etc., sometimes it's just easier because everyone's by their own computer with their own equipment to do it on a webinar. So this is what we're going to do on this occasion. Normally when we do these trading days, they're very intense. They last, as I say, for the full day, as this one will do. We'll take trades as we see them through. We'll look at particular setups. We'll look at setups that are working particularly well at the moment, and we'll discuss those in some detail. So there's a lot of content. What we would normally do on one of our 2-day live trading seminars at Ettington Park. Now we charge normally, I can't remember what it is, about £1,300 or something for that. This, as it's a webinar and you're all based at home and we haven't got to drive anywhere, it's simply £100. Now to attend this, you've obviously got to have a knowledge of what we're doing at the moment. So if you've already got our finer points, the day trading finer points and finer points equal, etc., that's fine. It's £100. If you've got the day trading and without the finer points, you can always contact Sam at Easy Trader, and she will give you a link so you can purchase the finer points. There is a deal there. And if you haven't got anything at all and you want to do this, I'll put a link on the blog itself. So there'll be a link on the blog text with how you can purchase the full package at quite a substantial discount. But we just want people that are sort of all in line and will be able to trade with us. Now, as I say, Kevin's going to be running this particular one. It will be looking at the setups he's using and literally taking things through in detail, being, as I say, very specific about some of the setups that he's using and which ones he's taking and which ones he's leaving at the moment. Right, got that done. Now let's look at the markets, and I've started off with the yen actually, because a lot of people say, well, the yen's gained weakened. Remember, this is the dollar yen. So it's the US dollar yen, hence why the yen's actually weakened yet gone up. Yeah, there we go. So we see quite a correction here from sort of this great big period we had, which was sitting around about the 75, 77, 80 sort of zone, and it now looks like it's probably overbought or oversold. Your dollar's overbought effectively on the dollar yen. Now, one thing that to bear in mind is sometimes you've got to put things into perspective, and we start coming out to a weekly chart and you say, well, actually if you run back, and it's probably best to look at it from a monthly perspective, and we're not even back to the 2008 sort of levels before the muck hit the fan, of just over 100, between 100, and it used to run between 100, 125, somewhere in that zone. And when you scroll this back, it was there or above for a good number of years. The yen has gained a lot of strength, during the crisis. It was seen as a safe, whereas before it was the currency everyone would short and play the carry trade on. With the crisis happened, a lot of those positions were unwound, and it caused a lot of very sharp moves, and the yen actually strengthened significantly as people unwound their carry trades. There was a lot of necessity to do so for numerous reasons with some of the hedge funds. They just had to liquidate some positions. So huge unwinding of the carry trade. But now we're seeing, as I say, yen weakening, running up here. Where to? Well, it can carry on. As you can see, when you put it into perspective, there's no reason why it shouldn't run back above the 100 mark, and this is probably where the Japanese bank really want it to be. It gives them a chance of creating some inflation, which they've been trying to do for some years, and just generally trying to get their economy running and steaming ahead again. Now, obviously, it's not going to necessarily run in a straight line. It's had a very good strong run up here. I do see some resistance around the one just over the 100 mark here. There may be a bit of an extension going on here. Yeah, the 2168 is about just around about the 100 mark, so we could get some resistance. I mean, the round number and everything else, I think if it runs up there in the next weeks or month, it may, as I say, gain a bit of resistance. Before it does that, I'm still of an opinion that it may, depending on what happens over the next few days or week or so, we still haven't hit the monthly pivot now. Sorry, just move this out of the way. The monthly mean pivot is generally hit every month, and it hasn't been hit now for, this would be the third month now. It can, obviously, statistics can always get shot, but generally it used to be hit quite early in the month. Now obviously if this runs on for the next couple of weeks and finishes the month off where it is now, well, the monthly pivot is going to be pretty flat, and it's going to probably be pretty much in line, and it's going to be hit quite easy. But it would be, I say good, but I wouldn't be too surprised to see a correction back to this level even now. It's really just doing this consolidated patch between these two levels. It really depends on the next few days on whether we can hold this sort of level here, about 92.5, 92, some of that region, or whether it breaks back above this these previous highs or near-term highs. But it's certainly, as I say, got potential for further upside for the dollar against the yen here, but would like to see some sort of correction. And if it did correct back to this monthly pivot, then I would be looking to get long on the dollar against the yen. So short the yen again some more. Okay, euro yen. And a moment to short these currencies back towards the pivot is not what the play I'm trying to do in either of these. Euro yen's pretty similar. Again, it hadn't hit the pivot, monthly pivot. It certainly looked like it was getting close, and there was. I mean, to me, there's a lovely point of buying point around about where the pivot is with these previous highs. So there's plenty of support at this level. So it would be lovely if it just drifted down here a bit quicker. And at that point, it would be quite a nice buy zone with the monthly pivot there. But at the moment, it's just really putting a bit of a bull flag in. It's consolidating after a strong move up, and just as you can see, we come out to the monthly here. It's just really, it's not yet got back there. It's just getting back to sort of the 2008 levels, but it was prior to the big, as I say, the big sell-off here. It was well above the 135s and even up to the 160s. Okay, this may not happen again, but certainly getting up towards this 145 area would be to be expected as we run forward. So there's still plenty of upward movement in the euro yen to be had potentially. Right, let's have now a look at cable. Now, cable's in it's been seen. I mean, we've seen another move off. Sorry, I need to come back a bigger picture here. And what we can see here, cable's been taking a hammering of late. Last couple of months, it sort of. Prior to that, it was sitting in a very tight range over a number of years. Here, we sort of got back up, and it's still, to be fair, it's still sitting in that same tight old range. We've got this sort of support level around these previous lows here. But if you just actually move it up to the more mean of those, and we're probably sitting bang on it at the moment. Now this triangle that I've drawn on here would give us from the break would give us a target of right the way around to the 12500 area, which you'd think, well, that's not achievable, but not likely to happen. Probably right, it may not get as low as that. I mean, there is still chance, and one part of the reason for this to come down, apart from the fact that today the Bank of England minutes came out and it suggested that more quantitative easing was being suggested and voted for by more members of the board. It was a sort of 3-6 or something like that on the vote, but it was just very dovish effectively, and it didn't like that. But also you've got there's this continued chatter that's going around the markets that the pound will be downgraded from its AAA rating. Now, when you bear in mind the US dollar's been downgraded from the AAA rating and the French franc's been downgraded from the AAA rating, it hasn't made a significant difference. It will make a difference, but it certainly has made much of a difference to the dollar, looking at the bond ratios at the moment. Now, looking at where we could easily get to, and for me, it may be very modest, but if we see a continuation of this sort of move over the next month or two, we could easily run back down to the 142.50, these lows here, out of order in terms of beyond possibility. Maybe it may just hold up on the previous lows there around about the 1.4 area, but certainly I think if we saw the pound downgraded, the sovereign rating downgraded, we could see about 500 pips come off it quite quickly. Although that said, a lot of it is being priced in. We've seen over 500 pips already off, but I think the day it happens, or if it happens, it could well and truly be the day that we see a really big 200-300 pips come off, at least in a day, and maybe some follow through. So it wouldn't take much to get down to these more conservative levels. As I say, the full triangles, so often they sort of they break out and pull back in, and it could still happen with here, but this support level is certainly weakening. Okay, that's just about it. As I say, the targets, if we were to get a bounce from here, well, we're very range bound on the pound anyway, and I would literally draw a line across there and say 1650 is the top. So that's it for me for today. I hope you have a great week. Kevin will be back. He won't be back on Friday. We're both at the Investor Show, London Investor Show on Friday. If you want to come and join us, I think we sent out recently an invitation to join us. You can get a free ticket to come in. I think if you turn up on the day, actually you'll still be able to get in for free on the day. It's at the Olympia Centre in London. So look forward to seeing you then, or otherwise we'll be back next week. Take care. Bye for now.